I bring in Diane King Hall to take a look at some of the key stories here on Wall Street. Good morning to you. We're kicking it off with Levi Strauss. Not so great.
No, stock is under some pressure today. It did beat expectations on both the top and bottom line, but there's some concern about the impact of tariffs on Levi's, which they'd expect to see some impact there. They are expecting fourth quarter revenue to decline approximately 3% from last year. However, their projections overall, their guidance was better than kind of overall expected, but they talked about just the complex environment that we're dealing with tariffs, and they think that could affect some demand there. But here's how they performed in the trailing quarter. Adjusted EPS 34 cents a share. Revenue was more than $1.5 billion. Again, better than expected. They have been raising some prices, and consumers have not been balking at those higher prices. In terms of they are expecting for the fiscal year an overall sales increase that is higher than expected. For the fiscal year, they're expecting a sales gain of 3%. That's up from their prior forecast of between 1% to 2% growth. They are expecting for the year adjusted EPS of between $1.27 to $1.32, also higher than what they had previously projected, where they had initially projected between $1.25 to $1.30. So again, their full year outlook, they are assuming that tariffs will stay in place. They're assuming that U.S. tariffs will stay at 30% on imports from China and 20% on imports from everywhere else. That's what they're modeling here for the rest of the year. Now, they had assumed the outlook previously on China. That does line up with what their previous assumptions were for China, but their assumptions previously for everywhere else was 10%. So you can see that impact of tariffs is what is dinging shares this morning. So you're seeing shares take a hit down about, 10% roughly there. But again, they've been an outperformer year to date.
Okay. Well, thank you on that. So we'll keep an eye on that name. Obviously, the tariff story, a big one. It's down 10.5%, folks. It's a pretty big move. But then we turn our attention over to some tech names. You're looking at Oracle, as the NASDAQ, by the way, hits a new record, folks, just moments ago. What about Oracle today?
Oracle's getting more love from the analyst community today. You've got a couple of price target adjustments here. Evercore ISI raising its price target to 350 from 340. They are maintaining an outperform rating. Citigroup also majorly boosting its price target. They're boosting it to 415. They keep a buy rating on the stock. They attribute their rating. It's essentially to Citigroup. This is a buy the dip opportunity. They see more upside, double-digit upside from here. They talked about that historic first quarter for Oracle. They wrote that back off that Oracle's had on concerns about the quality of the backlog, profitability concerns following just some of those those headlines, the conversation around the AI bubble. They think that pullback that we've seen recently is actually a buying opportunity and, quote, a broadening set of customers powering OCI growth. We've been paying a lot of attention to that and having conversations about OCI, and they expect management to provide, they said, incremental clarity on CapEx, financing needs, and long-term profitability around the ramping AI projects. Of course, we've heard a lot of conversations about increasing AI investment, increasing infrastructure, and how Oracle would be a beneficiary. So you are seeing shares move a little bit higher off the back of these constructive analyst moves with regard to Oracle. And then, of course, another potential tailwind, and we've heard about this from other analysts, the AI World event that Oracle has coming up in Vegas. That takes place in Vegas next week. That's expected to be another catalyst for the stock. And so that mirrors some other analyst views, Nicole.
Yeah, I should cover that. I should stand live at the event.
Let's go.
How about we talk about Applied Materials here, last but not least.
Team effort also for Vegas if I want to throw my hat in the ring. So Applied Materials. We're watching that one as well today. B. Riley is raising its price target to 265. That is up from its prior view of 200. It has a buy rating on shares, so it's constructive. It's even more constructive, more bullish on Applied Materials. Up a little bit more than 0.5% in response to this. The stock is up more than 30% year to date. The firm boosting its price targets based on semiconductor capital equipment, believes that there's significant order upside. They think that we're going to see more orders to come in the months and quarters ahead, and it's fuel for a leg up in the stocks in that sector in general, and that benefiting Applied Materials. Nicole.
Speaking of on location, Diane, you'll appreciate this, and I'm promoting a guest in the future, folks. Anybody who likes sandals and beaches, I'll have my friend Adam Stewart on
that's
soon,
awesome.
the CEO of Sandals and Beaches Hotels. It would be nice to do that live from the Caribbean. Diane King Hall, he'll be live from the Caribbean. I'll be here. But we'll be speaking with him soon. Thank you, Diane.